Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and we're at the 14th of August, 2018, about 2:40 p.m. Central Daylight Time. As you can see, it was an up day in the grain markets. Sugar pretty much unchanged. Energy markets either side of unchanged most of the day. Not much going on there. The dollar continues with its gains, especially against the euro and the British pound, and for that matter, the Japanese yen. So we look at that. But what got into the beans to be up 11 cents when yesterday's crop condition reports really didn't show that much of a change? And my guess, quote-unquote guess, is that the unloading of the cargo ship in China from Sino-Grain, where they paid a $6 million tariff, is the game. Now understand who's the owner of Sino-Grain. Chinese government. So we're going to put a tariff on. We're going to make Sino-Grain our government-backed trading entity, give the money back to the Chinese government. In other words, they're going to move the money from my left pocket to my right pocket. 2 more cargo ships are waiting to be unloaded. When they get unloaded, it'll be the same tariffs. And what we had talked about here before is probably taking place now. Once you get through with the South American crop, you still don't have enough soybeans for Chinese needs. Where are you going to get them? It's going to be America. Is this market going to be able to say that the 850 area is in fact the bottom zone? Well, the market's going to have to decide that. When we take a look at the chart, you can even look at the 814 level to make that decision. But I think traders are going to study yesterday's break low in that 850 area. It was 845.25 on the weekly chart on a closing basis to make a better decision with that. Take that out, and you might go back down to that 814 area. Where could the market go base this? Well, if it can clear the highs back right here of this 886.25 zone, and from here, understand, that's quite a bit that you've got to go. It's 20 more cents. But if you got that going, could you make a run for the 18-week moving average of closes? That's what some traders will be wanting to know. There's certainly resistance on the daily bar chart, and this is what this is, a daily bar chart showing the high-low close of each day along with the opening. When I look at the swing line, I see that I've got a pattern of lower highs, lower lows. That is bearish. The 18-day average will offer the first resistance, in my opinion, and that'll come in around the 887 level. Still got to clear that 914.5 level. The 100-day average is way up here. What about Bollinger Bands, which offer theoretical support and resistance levels? Well, the resistance comes in at 922. To get to that, you have to take out this last rally high of 914.5, at least on today's action. That's very important to me because that would break the downtrend, lower highs, lower lows. Right now, where are we? Trend down, bias down because you're under the 18-day moving average of closes. Yesterday, you made a run to the 851 level, didn't quite hit that 850 Bollinger Band. You got close enough to it and you're lifting a bit. We'll see if the resistance shows up here. And momentum, which did get down, if we come to yesterday, never did get oversold, getting a little bit of a bounce. I don't know that you can say there's a trend change of any type. In the meal market, we reached up today, got up to 338.90, which took out 338.50. So again, one of the things we're talking about in this market is the bouncing between the Bollinger Band highs and lows. We're also doing that if you look at the November beans, highs to lows within those Bollinger Bands. It's more sideways action. Did we get better follow-through in the meal? Well, if we take a look, yesterday's low was 321.10. That took out the lower Bollinger Band of 321.60. Offered the support. I'm going to look for the resistance to come in there. So we'll see what gives with this market one way or the other. As we take a look at the oil market, we have lower highs, lower lows. So the big question is, will the market find resistance at the 18-day average. Should it clear 29.22, it would negate the pattern of lower highs, lower lows. Momentum is flattened out, but I would expect to see the bears waiting for that market at that 28.77 level. In the corn market, we've got a market that has finally bounced. You had a pattern of a higher high and a lower low. There is no trend here. You're going pretty much sideways in momentum. It had been pointing down, but you're starting to sideways out as the market comes to that 18-day average of closes. This recent rally high and break low, neither hit a Bollinger Band. That's interesting too. In the wheat market, the market has got a pattern of lower highs, lower lows. Bearish. Market's under the 18-day average of closes, gives it downside momentum, and momentum is pointing down, another pattern that is to the downside. Resistance here at 545, but from this point to yesterday's high, that's 30 cents away. I don't know if the traders, the bears, want to take that type of risk with the market. I say bears because you've got the pattern of lower highs, lower lows. In the sugar market, you're oversold. Lower highs, lower lows. The market is trying to respect the lower Bollinger Band, but in the oversold condition, it makes it a hard market to trade. The other thing that's going on with sugar is over time, what's going to happen is the sugar farmers are converting in Brazil and other South American areas away from sugar to soybeans because they're worth so much money on a relative basis. That's going to be interesting. I was reading today there's about 260 or 70 sugar mills left in Brazil, and they're having trouble procuring enough sugar to keep those mills operating the way that they want. So interesting thing that's going on there, and that's all because China's now stepped into that market in such a big way for them. In the coffee market, you're still very much in the bear camp. Market is just riding this lower Bollinger Band lower, but in an oversold setup. In the cocoa market, you have lost the embedded reading, which often leads to price in the 18-day average. That's at 21.67, trying to make a run at each other. It's certainly when a market's under the 18-day average, how I teach in my charting course, and if you go to our website, www.iraepstein.com, you learn about the course. One of the things I teach is, when you're under this 18-day average, it's a filter to be bearish, not bullish, and that's still at work. But when you lose an embedded reading, that takes a priority, and everything's about priorities on charts. It's certainly not a reason to be long, but every reason not to be short, and that's, what I do in a checklist. We talked yesterday that if cotton tried anything today, it might try to get back to the resistance level of the 100-day average and get back over the lower Bollinger Band. It's at 83.04 right now. That Bollinger Band's around 83.61. You haven't been able to get up there. If you'll notice, the high's 83.43. Still haven't made a run there for the 100-day average, but I don't deny that it can take place. In the cattle market, pattern of higher high, lower low. The 100-day average seems to be the support zone in an oversold market that has hit downside targets. In the feeder cattle market, same thing. You've hit your downside targets. You made a run today for the lower 100-day average of closes, missed it by about 40 points or so, but the market is trying to hold there in an oversold condition. I don't see anything that's going on there of interest. In the hog market, interesting. If you were to take out 50-80 on this chart pattern, you could actually get a signal that turns down. You'd have lower highs, lower lows. The market is up at this point, and the bulls will probably try to defend their position at the 18-day average. Let's round it to 51.20. They don't want to see 50-80 taken out. So I put it all together, try to come up with game plans for you, and so does our company, Linn Associates. And our research is unique. It is written for commodity traders, both in the options and in the futures arena. And you can get all these different reports, or you choose which ones you want to get if you haven't seen our research. We'd like you to look at it because it's hard to come by what we know as just commodity research. Yes, you can get research that's always bent towards the stock market, but it's harder and harder to get commodity research written by commodity people for commodity traders. Very different. And if you'd like to try this, it's really simple. Just give us a call, 866-973-2077. You can always go to our website at www.iraepstein.com, or you can click up here. I don't know why that got stuck, but you can see it on the screen anyways. I'm Ira Epstein. You have a good day, and I will see you all tomorrow. Take care now.